Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, we're looking at a daily chart of the ES, and I've marked the 1764 level here with a purple line. Um, it was yesterday's high. It was the high from Thursday, and it's really the last stop or the last little ledge that the bears can cling on to before we go make new highs in this market. And as it stands now, they're going to try to keep it there. The high from Globex last night is 1764, so that's 64, 64, and 64. The peak at 64 is confirmed on a breakthrough 47, and nothing other than that. So what am I doing? I'm still short. When we opened up yesterday, we opened up to some very big ticks. I mean, sustained ticks over 1200, over 1300. I did a full add on my short up at 62.5. I took that add off down at 57.5, for about 5 handles, um, and I waited. Um, a lot of people in the room got long that. I waited it out. I should have got long with them, and because we ended up, over time on a nice, really boring Monday. And Mondays have been incredibly boring days in the market recently. Um, we kind of inched our way back up. So I'm looking at 64. I'm looking at 47, and the Bears are essentially out of time. They can't do this for another day. They could not afford yesterday. They could not afford that green candle. They needed to do a reversal candle off of those big ticks off the open. They needed to be big ticks off the open, rejected, and initially it was rejected, and that was what the Bears needed to do, but they were not able to follow through on that to take us down. So the Bears are very exposed right now. I would expect to see a push down in the morning. Whether that push down starts to create lower highs that the Bears can capitalize on, that's what they need. And until the dip buyers are run out of town, this dynamic of this uptrend is not going to change. You've got dip buyers who, to say they have no fear, does not even describe it. And why should they have any fear? When have they ever been wrong buying a dip over time? I mean, if you're waiting for them to be right within 30 seconds, well, okay, sometimes they're wrong. But if you're waiting for them to be right, say inside of 2 weeks to 30 days, like some long-term money is, they're never wrong. So until that dynamic changes, you're going to keep seeing these dip spots. Now, you can't even see this dip on a larger chart. Now, the Bollinger Bands have curled over. That is in the Bears' favor. And this little 3-day pullback is really not enough to get enough fuel to move up to new highs. So it's in the best interest of both parties to probably do a little bit of a deeper pullback. You've got the 40 area, you've got the 34.5 area, which is going to start to become interesting. You've got the middle band now that's up at 32.94, so effectively 33, rising to meet that area. It would be a nice place to target a pullback. The problem is now the Bears really needed to push yesterday in order to put that kind of a level in play. We're too far away. If you get this candle down to here today, I would be shocked. So the Bears' first task is 47. The Bulls want to get through 64. A move through 64 with any kind of fervor is going to give you 73. Another test of 47 needs to get broken through or that's pretty much the third time's the charm, and 47 is a floor, um, and we go up from there. So expect that area to be contested, very choppy, messy, sloppy trade. But the key in looking at the day is, are we making lower highs, or are we making higher lows, and go from there. Okay, everybody, that's all I got. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.